Monday morning, folks, and thank you so much for tuning in. Joining me is the director of FinMet, Mr. Sunil Kashyap. Sunil, very warm welcome to the podcast once again. Um, last week was last week watching coal markets was like watching a nice Hindi masala Bollywood movie. I felt like there's a lot of ups and downs, and usually more downs than the ups, as you've typically come to see of the new age Bollywood movies. Uh, there's certainly some optimism. The last week when we caught up, right? We said that gold is holding this key 1936 support levels, and we think it's going to bounce back. But quite the opposite happened actually.
Yeah, I think I was surprised because we saw the dollar weakening against most currencies, and you would have expected gold to bounce up at that. But I think it was driven by some of the news from the Fed, and the markets were quite surprised during the testimony of the Chairman Powell. He was quite vociferously saying that the rates will go up and will remain higher for longer. And I think that's what really affected gold, and it meant that the negative yield play on gold was playing out, and that's why it fell off.
Definitely. The interesting thing is that we are now talking about a short-term downtrend, just which is a rapid change from our conversation last week, where we were saying, oh, we're going to maintain in a bullish uptrend. So that's definitely a change in tone in our own dialogue and stance that we've maintaining. And curiously, we were also able to identify a swing trading opportunity from a bearish side, which would be quite interesting to see. So let me just show you where that opportunity currently lies. So this is the spot gold price action, which has been set at a 4 hour time frame right now. And what we can see, Sunil, is just a consistent push downwards right from a couple of weeks. We've seen just constant ups and downs, a lot of volatility over here. Last Friday, we did see this massive push down, and then we saw this entire long wick over here. Now, I suspect that this is the region that we're again going to see a bounce back to. Bulls are going to step back and try to raise uh, the price action to these levels. These levels that I'm talking about are back into the 1933 to 1940 region. So if you see here, this is the 1933 to 1940 area. That was the previous area of support which we were talking about. And I feel that if we see a red candle right over here, at this point where and we don't see a break above this region, this box over here, that's where the buying opportunity, or rather the short selling opportunity presents itself. If we place our stops right here with a risk reward ratio somewhere between 1.2 to 1.3, we can easily, I think, achieve profits, keeping our target somewhere around the 1909 to 1921 region. So these are the two supports in red that I have kind of kept in. So basically what I'm saying is, if we enter over here, we might expect gold to kind of move bearishly, and we can take profits when we reach the 1909 to 1915 region over here, where the supports are placed based on the prior price action that we had actually seen gold head towards. So this is interesting. This is something that I think buyers can, sorry, short sellers or people who are just wanting to play and trade the markets can actually enter into. Any thoughts on
And
this,
what's
Sunil?
the stop loss? What's the stop loss that if it goes against them? What stop loss level is it?
So currently the stop loss is set as 1958 to 1959. So that's why
Okay,
the risk reward ratio is somewhere around just above one. It's not exactly quite a profitable trade, but that's exactly why the stop loss has been kept quite wide. Yeah.
okay,
Yeah.
interesting,
Yeah.
interesting.
Yeah. All right. So the other bit, Sunil, that we saw this weekend was the development in Russia. There was civil conflicts in Russia that definitely would are leading to increased geopolitical tensions. Um, Now that they have settled down, do you still think there is tension and possible implications of these escalations in the week to come on gold?
Yeah, I think the escalation is probably not going to be there, but the uncertainty is definitely there. People are going to analyze this several times over, and what it means for the gold market is that the uncertainty, the people are going to have doubts about what's going to happen, is going to mean that people will shift their money flow from risky assets to safe assets like gold. So on Monday, I do expect a little bit of a pop in gold prices. I don't think it's significant. I don't think it'll last for long. And like you said, it may be a short selling opportunity for people to sell around the 1935, 1940 level, hoping for a downturn back to 1909 levels. But I do think that there will be some uncertainty and some volatility in the gold price in the next couple of days.
Certainly, certainly. From a more long-term perspective, Sunil, now that you've had so many Fed testimonies and so many correspondences happen, where are you currently? How are you taking all this information in, and how does that change your view on long-term price action of gold?
Yeah, I think overall I'm still bullish on gold. I think the reason why is because there's a lot of uncertainty about other asset groups, equities, bonds,
Hmm.
etc.
Hmm.
So the whole story of diversification into gold is still very strong. The flow of money into gold is still, I think, considerable in terms of institutional money.
Hmm.
So that's why underlying, I think I'm still supportive of gold in the medium term.
And you are very much close to the Chinese markets. Any developments from China that our listeners should be aware about?
Yeah, China's currency has been weakening,
Hmm.
and so the fear of continued weakening of the local currency has meant that people are moving into gold. So
Hmm.
gold premiums in China are around $6 to $7.
Oh,
So that's one of the reasons why I am a little bit supportive of gold because I think physical demand is still quite good.
definitely, definitely. Thanks, Sunil, for rounding up the entire outlook for the coming week as well as for last week. Certainly, we're going to watch all the events very closely. But till then, thank you so much for tuning in, and see you next week.